Okay, this is the fifth in my series of building out the 5G network and what are going to be the best companies for you to invest in based on my opinion. If you're new to this site, Best of Us Investors, we're something of a tribe. I like to call us a tribe, and we identify ourselves with our hats and our coffee mugs and things of that nature. In case we run into each other on the street, we're trying to build a community of 1 million like-minded investors that can feed off of each other and learn from each other. I'm kind of the hub of it, and right now I'm dealing with 5G. In fact, I got from one of the tribe members, Tony Lamorsa, wrote me and asked me to look into Inseego. He believed from some of the research he's done that it could possibly be a good 5G company. I'll tell you up front, I won't be investing in it, but I thought it would be interesting for you to see how I came to my conclusion, and then you can draw your own conclusion, and maybe you can learn from what I've done. Invesco is basically I went to their website, was the first thing I did, and they're very keyed to the Internet of Things. They are manufacturers of modems, of routers. They have some software that helps you then channel if you have a fleet of trucks or if you have a group of elevators. They help you put that software from the modems and the routers, and you interpret the data that you gather from the 5G network. They also are involved in voice data, and they're also create hardware to give you a hotspot. And this is, from my understanding, is those kind of where people don't have good internet service and they can access the 5G with some hardware at their location. So that's kind of what they do. The next thing I want to do is then go and look at a chart of their past stock history. And what I'm looking for here is to get an idea of how the market has responded to them and then how they have responded to the market. I was able to determine they're about a 20-year company, so they have been around for 4G. And so we should see some, if they've been able to gain some traction, we should see some steady growth on a 20-year company. But yet they're a $9 stock. So come with me, let's take a look at the chart. One of the first things I like to do when I am looking into a stock is look at their chart and see what their history is and the movement of the price. And so here at Inseego, and I'm on tradingview.com. This is a free site. I can see that if I go back to 2013, it's bounced around in price from about $1.40 all the way down to $1. Had a surge here and got up to about $6.50, and then was up in the $10 range, and then with the pandemic dropped back down into the $3.88. And then recently had a surge all the way up to $15, has had a pullback and is trading at $9.96 as of Friday's close. And I would say, well, they apparently have come up with something, and they're getting ready for 5G. But then I want to go down here and I want to click all, and that's going to change me to a monthly chart. And I want you to look at this. Some of you probably have never seen this and don't know what that is. This is the dot-com bubble. This is 2000. This stock went public and was seen as a potential major player, obviously, in the internet market, and went as high as about $246 a share. And that was in roughly December, January of 2001. And then it came back down to $4 a share in a matter of, that would be July, so a matter of 6 months. And this is the dot-com bubble. This is when people realize just because you're in the internet doesn't mean that, and you have a .com behind your name, that you are going to be a major player in this new invention called the internet. So they have bounced around down in the 25 to $1 range for years, and here is where we are right now in the $9.90 range. With that being said, the next thing I want to learn is I need to learn more about this company. First of all, I see it's a 20-year company, so I'm going to go over here and click more. Nope, I want to go down further and click more and look at their financials. And I see this is a company that's generating some revenue. They had net income of, that was their income. I want to look for total revenues, $219 million. And off of that $219 million, they had 16 million in gross, well, that's quarterly. They had $60 million in gross profits last year, but yet they have a negative cash flow of 19 million. They have a total debt of some $97 million. So this is a non-profit organization. As you see, your price to earnings ratio is 0 because they're not making any money. So I want to see if there's some extenuating circumstances, and I want to learn a little bit more about the company. So I go to their website, and I want to see who's running the company. And it's being run by Dan Monder. I look at Dan, and I see that he is the CEO, and he's the chairman of the board. He came to the company in 2017. He was made chairman in 2018. And he's got a strong resume of corporate names in here that would qualify him, you would think, as someone to run a software or a chip company, an internet company. So then I go to his support staff, and I see Mr. Smith here has a biography, but something sticks out to me as I go through these. Here again, he has been an officer at Trivia View Incorporated since February 2017, but now he's over here. So he's brand new to the company. Then I come over here to our president of Internet of Things Mobile Solutions. And again, I don't have a date that he joined the company. I can't put a time when he came and joined the company. As I go through this good-looking group of members that are running the company that I want to put some of my money in, there is no start date. And I found that to be true throughout the officers of the company. So I ask myself, why don't they want to tell me that this is all pretty much a new group of people? So I Google annual report, and I go and they give me a link to their annual report. And I go to this is all the way back on page 139 of 176 pages, and I look. The latest annual report is 2018 compared to 2017. And I see that they had a gross profit in 2018 of $70 million, up from $67 million in 17. But in 17, they showed a loss of $22 million on that $67 million gross profit. But our new staff, our new advisors have turned, although the amount of revenues were down, the profit was up, and they turned a loss into a positive of $14 million. But because of their tremendous amount of debt, the servicing the debt has eaten up all that, but they brought a $45 million loss down to a $7 million loss. And they were able to write off some, apparently some, it says loss before income taxes, and so their net loss went from 45 million down to 8 million. So I look at this and say, this company isn't making money, and it hasn't shown the capabilities to make money. Why would I want to invest in it? There are a lot of other options that are there for me that I don't see why I'd want to give these people, let's say, $10,000 or $100,000 worth of my investments or my portfolio and believe that they were going to make something out of it. Okay, I hope you can see that the steps I went through is to find out just who they are, and as we know, they went through the dot-com bubble. They've just recently, I don't know how many changes they've had in their staff, but they just recently changed their staff. And so I'm looking at it and saying they had a big bump in March, and they were going up well, and then they took the dip from the crisis, and then they had a big bump. And my research shows me that their CEO showed up on Mad Money, Jim Cramer's show, and made some claims and some projections, and they got a big bump in the stock. In fact, their volume surged, unlike they had seen volume in the preceding 20 years. And then it came back down. So what I see in this company, and again, this is just my opinion, and take it for what it's worth, and so watch some of my other videos, and before you put any credence in what I say, come to know me better. I see this as a company who's been a paycheck for a number of people. They have substantial earnings that are coming through, revenue that's coming through the door. They have some products that they put out, but they don't show a profit. So there are some executives who are making a good bump of money. I see a new staff of executives that, my interpretation, again, that's all it is trying to set this company up to be bought out. Now, why would someone want to buy them out? Well, let's assume that they have some decent modems and some decent routers and some decent software, and their hotspot hardware is good. And so it could become a series of products that another company could put on their shelf and eliminate the administrative costs, and eliminate some of the marketing costs, and eliminate some of the research and development costs that Inseego is incurring right now. And so a lot of this revenue that they are generating and have been generating over the last 20 years would fall to the other company's bottom line, and or at least the majority of it. So that makes them, to me, a attractive target. And the change in staff is the staff that is designed to build a saleable product. And the saleable product is Inseego. So if I were going to buy it, I would not be buying it because of the 5G build out. I would be buying it because I think they are a target for purchase. So then I got to look at it and say, okay, what kind of price might they be able to get for this kind of company with these kind of earnings in this kind of history? I don't have a clue. So that being said, I'm not going to speculate on it. If I don't understand something, if after spending probably 6-7 hours on this, I don't understand it, I'm not going to buy it. And because, again, I reiterate, there are so many excellent opportunities out there right now because 5G is going to happen. We are behind China on it. we as a national pride want to make a statement here. We have a lot of people out of work. If we can get people hanging antennas and installing Internet of Everything sensors in your home and in your furnace, and if we can put people to work doing this, this is going to be a savior for whoever our administration is in the next 2 quarters and then the following 4 years. Building our infrastructure has already been declared by both sides of Congress and the administration as a priority, and that priority will come to the top of the scale, I believe, as soon as we get through the coronavirus. And I don't know if we have to have a vaccine, but as soon as it becomes a secondary note. I also believe that 5G is not a get rich or catch a rocket into the sky investment. We've been able to do some of those with some of the Valero oil, the Disney, the McDonald's, the American Express investments that I've pointed you to in the last couple months. These are not rocketing stocks. Ericsson, Marvell, Crown are not stocks that are going to rocket up like some of the others that we've had. These are long-term investments. So make them a part of your portfolio, but I still concentrate on the big 6. If you don't know what I'm talking about, the big 6, check this video out. And those are our, I believe, the companies that are going to give us our best gains in the relatively short term. 5G is more of a long-term investment.